Hello, everyone. It looks like the stock market is trying to churn out around these resistant levels. Nothing is in the books yet. If volume would have been well above average today or even heavier than yesterday, then I'd be pretty certain we were going to move down. But overall, I'm all about symmetry. And so symmetrically, before really the next leg down, if you think it's going to do this again, you're going to have to basically take this line right here and let it go out about as far as it would sideways, and we're getting there. If price would come up to about the 5200-day moving average and meet with the 5200-day moving average, then we have a reversal like we saw intraday where we gapped up, rallied, and then sold off and closed near the lows. Then I'd want to really push the short side with this market. But for now, we've bounced back quickly, symmetrically. This move sideways here off the lows isn't as long as the move from the highs to the lows here. So it's just not perfectly set up. But overall, the indexes look very weak. The Russell 2000 looks weak. Can't even break out to a new short-term high. Still could, but for now, it just looks like that the market is under a lot of heavy resistance. Doesn't look like it wants to really rally, but we are pretty far away to think that we're just going to collapse and move sideways here. Like I said, if we could back and fill for another few more weeks, because just to make it look symmetrical, even on the SP 500, it's going to have to be 2 to 3 more weeks, and that 5200-day moving average gets near, then I could see us selling off. But for now, any downside's limited, and I would even look for a test of the lows to create a possible bottom. Why do I say that? Because today saw something I haven't seen in an extremely long time. The Investors Intelligence Survey came out, and currently bulls are at 27%, excuse me, while the bears are at 26%. I haven't seen the bulls touching the bears in an extremely long time. I can't remember when the last time was. And while they haven't crossed yet, they're getting to I believe the bulls are now at 27% is at a 5-year low on that survey. So that's impressive in itself. Considering that we're at a lower level of bulls than we were back in 2011 at those lows. However, the 5-year highs for bears is around 45%. So at 26%, we're not there yet. And technically, we still haven't crossed to where we see more bears than bulls. But maybe if we sell off here and retest the August lows by next week, we'll finally get a cross where we'll finally have more bears than bulls. Like I said, I can't remember last time that's happened. I take it had to have been 2011. And then also the AAII survey came out and it's 32% bulls, 31% bear. Pretty even there. Could always see a bounce. But once again, there's not more bears than bulls. And until there's more bears than bulls, I won't think this market's really sold out. So the Investors Intelligence and AAII survey have a ways to go. The NAIM, or yeah, NAIM, whatever it is, NAIM to me. Association percent invested, this normally can get up to 100% plus. Right now it's currently at 23%. It's fallen from 28% the week before. So it's not even headed lower. But once again, this thing can get all the way down to 0% invested. So well, once again, we're not at any extreme levels. That's why I could see that we could still have further room to fall here, even though symmetrically odds are extremely high that what you're going to instead see is a lot of backing and filling. But even then, another potential reason why we should fall before we even back and fill is that my scans are just light as can be. My CanSlim scan, my IPO scan, my Perfect Speculator scans, my new high scan, my price volume BOP scans, my high price stock scans, my BOP, green BOP for 20 days scan, my max green BOP scans. Everything is just, there's nothing out there that interests me. These are the stocks that I flagged. Recently I flagged ULBI, even did a small stock twits write up on it yesterday where I analyzed the chart and the overall fundamentals. And that's not that impressive. Obviously, it's so extremely thin that I have no interest in it. I mean, just average daily volume is what? Less than 20,000 shares a day. So I do not have any real interest without the chart being perfect. Clearly, it's not. Today, MPG, I flagged that one. You can see it's breaking out. But on an arithmetic chart, you can just see how sloppy it is. I mean, this is not a very tightly, I mean, let's compare it to like the previous uptrend in DXCM. Look at this nice solid uptrend. And then compared to the way MPG is setting up, and you got a completely different situation, as you can see. And then also KINS, and as you can see, because it's so low priced and thin, it is also not a great candidate. But you can see following earnings, it's been being heavily accumulated, and it's showing some relative strength. So, like I always say, during rough periods, correction periods, rotation periods, I always like to focus on the small cap stocks that are kind of bucking the trend. And and these stocks are, but KINS, ULBI, and MPG are not the kind of stocks that start strong, powerful uptrends. And when you look at the big boys, Facebook, that doesn't look good. Apple, that doesn't look good. Let's say Microsoft, no good. Cisco, that's not good. MasterCard, no good. Visa, no good. Starbucks, no good. So let's see McDonald's, no good. These are ugly chart patterns. These don't look like they're building consolidation patterns. And even if they were, let's look at the last consolidation pattern McDonald's had built in December. Okay, yeah, built it out, and then it breaks out in February. And then what happens? It chops around, basically going nowhere, leading to the August breakdown. So once again, until we get some nice, calm, beautiful looking technical patterns like HCKT is trying to do. But what's going wrong with HCKT, which is still an end of day long signal, but shook me out on this day. And if it wouldn't have, I would have reset my lows of days to this level and it would have shaken me out this day. But on a closing basis, it's still a long from this long signal, which means on an end of day basis, you're still at 14%. That's amazing if you wrote out that volatility. But BOP is going the wrong way. So it's not building out max green BOP. It's going the wrong way, indicating it might want to fall and roll over. And like ANAC, ANAC's volume's picking up on the down days compared to the recent up days. And this is an end of day hold still too. And it's looking troublesome. Of course, Tree, which just shook me out, is holding in. But once again, this consolidation pattern doesn't look as good as these consolidation patterns back here, does it? So we just have a general overall just character change in this market, and it's just hard to get too bullish. And we continue to want to watch the CEFOI. Looks like it's potentially topping out. Probably is now, because guess who doesn't have shares to borrow anymore? Interactive Brokers. And BEAT also looks like it's going to try to top out. And then look at some recent long signals, not long signals, but positions that look like they were handling themselves well. They're starting to reverse on heavy volume, pretty ugly. And then look at what CVGW did today. Breakouts are fake outs in bad markets, and this is a clear sign that you're in a bad market. Not good at all. Now, that being said, no end of day sell signals. I do want to do a little bit of work with my sell stops on UGLD. ULGLD hasn't failed any sell stops yet, but it is now closing below the 20-day moving average before producing any gains. Since it's on lower volume, it's not a big deal. You don't have to sell 50% on an end of day basis, but move up half your sell stops to 9 and the last half back here at 885, I believe, on UGLD. And then with the market looking like it's doing, I didn't think I had any new long signals, but I do. Brazil looks like it's probably trying to hammer out a bottom. Looking at MACD, you have positive divergence right here at the lows. TSV, positive divergence at the lows. Stochastics, positive divergences here at the lows. RSI, positive divergences at the lows. So I've got a full-on confirmation in that one. So BRZU is a new long signal ETF-wise. However, it's kind of volatile, giving me a lot of risk, in this kind of market. So it's kind of sketchy. So it's going to only be 2.5% of my account capital, using the high day as my limit, 2178. So 2.5 from my account capital in BRZU. This is a beautiful looking technical pattern right here off the lows. We'll see if it works. And the big position this evening is a short in the NASDAQ. PSQ was in my ETF scan, and it confirmed in the price volume BOP scan. BOP is a stronger green than the day before. Volume surged today as it bounced right off its 200-day moving average. Half my sell stops will be below 56.67, today's low of day. And the last half of my sell stops will be below 56.28, the lows of that recent support. But a big bounce off the 200-day moving average on strong volume, higher BOP. It looks like this market wants to re-roll over, but just in case, if we haven't built out enough time sideways before wanting to actually fall down in this market, this position has got very low risk with those two tight stop loss areas. That's why it's going to be 5% of my account capital. But that's it. It looks like we're churning, everyone. So cash is still king.